Hello friends and welcome to my YouTube channel Simply Stocks, and today I bring to you one of the best auto ancillary companies, that is Automotive Axle, for you. Whether the bottom has been made and what lies ahead in the next 4 or 5 years for the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Automotive Axle, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail and on a daily basis. Once you get the $10 membership, you will have access to my portfolio, to my watch list, and a number of stocks that I talk about, a number of podcasts in which a number of stocks, companies, and markets that I talk about from time to time. For detailed, you can say company analysis or number of stocks that you are holding, you can directly email me and we can work things out. Now, about the company, established in 1981, Automotive Axle is in the auto components manufacturing and boasts of marquee clients in the HCV, MCV, and you can say commercial vehicle segments. Global presence with clients across Europe mainly. The clients include Tata in India, TIL, Daimler, Mahindra here in India, SML, etc. It is a Kalyani Group company, so you have to take that into account as well. If you look at the numbers, then market cap of the company is around 1000 crores. Sales dipped to around only 38 crores versus 420 crores last year. This is Q1 numbers, Q1 FY21 versus Q1 FY20. Sales dipped by 90%. A profit of 24 crores was turned into a loss of 23 crores, and that was pretty understandable as to what has gone on with auto companies and ancillary companies. It is a debt-free company, return on equity of 7.8%, operating profit margin of 5%, which has dipped over a period of time because of the slowdown in the auto industry for the last 2.5 3 years. There's a very high combined promoter and institutional holding of around 88%, so only 12% free float is there. If you look at the performance, a top auto ancillary company, so performance wise it has been very good. Even in this downturn, it has outperformed the market, yet being in losses. Has been an outperformer in the industry. Backed by the Kalyani Group is also a very good sign. It has done nothing on a 5 year basis, just because over the last 6 months it has fallen a lot. So on a 5 year basis, the returns have been virtually non-existent. And if you consider the same thing as what happened with the pharmaceutical index, that for 5 years from April 2015 till April 2020, the stocks did virtually nothing, and then you saw the surge. So I expect the same sort of surge happening in some of the auto ancillary plays, especially stocks like Automotive Excel, whenever the tide turns around, maybe in 12 months, 18 months or so. So probably this is one of the very few stocks in the auto ancillary space where I'm bullish on. uh, Results have been bad for Q1 but have remained robust for the past few years, and that is where the my confidence comes in, because in the heavy commercial vehicles, or you can say high grade commercial vehicle segment, this is one of the largest players. And whenever the tide turns in the CV segment and starts to move little bit, the stock could surge 2-3x from the current level. So 17-1800 is not beyond Automotive Excel over the next 4 or 5 years, if things really materialize on the ground and really get going. And it looks like that the auto industry is coming out of a slump and may just do that over the next 9 months to 12-15 months time. So probably 23 onwards things will look very good. FY22 onwards, things could be looking extremely good. So one has to be a little bit, this is a slightly riskier play, so you have to take that into consideration. If you take a call on this stock, probably what you do is look at a stop loss that you're convenient with, that the loss that you can take, and take a call on this stock at these prices. So on a 5 year basis it has done nothing but low return ratios for the time being, but strong for many quarters it has remained. And I believe that once things start moving, the stock could surge very quickly. So why there has been a slowdown? Auto industry has been under stress since FY18. So since the beginning of FY18, that is 2017 April May, auto industry has gone through a lot of turmoil, and the stock started to peak out around 2018 Jan, and things started to go, you can say, pear shaped from second half of 2017. And over the last 3 years, virtually, there's just a couple of months left from December 2017 till December 2020, 3 years, things have remained very, very bleak. And some companies have remained resilient compared to others. Others have virtually gone under. But companies like Automotive Axle, company like GNA Axles, then there is Motherson Sumi, then there is I think Sundaram Fasteners. These are pretty good companies in the auto ancillary space, and that have remained afloat. I'm not saying that they are giving very good results, but that they have remained afloat, and these are the companies to look at which are debt free and still making some sort of sales in difficult time. Commercial vehicle segment has been most hit, and everybody know about it. Over the last 3 years it has been under tremendous stress. And if you go back in time to 2010, 11, 2012 up till 2012, 13, things were very, very bad for the commercial vehicle segment. In fact, something like an Ashok Leyland was trading at 12, 13 rupees or even lower, and these companies like Automotive Axle, etc., were also down at least 50% from the current level that they are trading at. But look at the surge that took place from FY14 onwards for 3 years. So this is what I'm banking on, that probably 3 to 4 years of up move could begin from second half of 2022 calendar year. We could see a trepidation for the next 6 months or so, but after that there has to be a revival in the auto industry. It cannot just go on forever. So these are some of the stocks to look at. So economic slowdown hurt the infra to the core, real estate to the core, and I won't be surprised if real estate also starts moving from next year, but not to a greater extent. And that's why it's better to play the ancillary space of real estate, like wires, cables, something like CV segment. Not to a not to a lot. Say, don't put in a lot of money, but a little bit of money can be put in, just to understand as to how things go over the next 2 3 years time frame. The returns could be pretty good if things go right. So again, I believe that this is a risky play that one can take on major decline. So projection of further stress in the next 2 years has meant that people are not investing in the stock. But I believe that next 12 months things could bottom out for at least the ancillary space, the infrastructure ancillary space. The sector has been out of favor for the last 2.5 years, and one has understood that. One has seen the fall. Some of the auto ancillaries have seen over the last 2.5 years. If you look at the technicals of the stock, then major long-term support is around the 390 levels. 800 is a resistance zone. So this is a vast range that we are talking about. Strong up move is expected above 880 or so. Right now it is trading at 670, 680. The 200 DMA is at 630. So if somebody buys at these levels, probably keep a 630 stop loss. It is weak on charts, but looking pretty strong at the moment. And I believe that okay, next 6 months could be difficult, but after that, if things go right, the stock could scale 1700, 1800 in the next 4 to 5 years, somewhere around between that period. So my call on the stock, probably hold if you have it. So people who are holding the stock should hold on to the stock. I don't see any reason to sell the stock, even if they are making a loss of 20, 25%, 30% on the stock. So people who are having it can probably hold on to it, even if they are making a loss of 25, 30%, even if they are holding on with an average price of 850, 900. I know that they are down 30-35%. What they can do is, on any massive decline in the market, if the stock falls around to 600 levels, those are good levels to average it. Have a good 3 to 4 year time frame, and in that period you may see the stock surge towards 1200, 1500 levels, and then you'll make good amount of money. I believe cycle should turn around in the next 12 months, not even 18 months, but over the next 12 months, and the surge will be very fast. So you look at what has happened in 2017, would same thing is expected to happen, I believe, in 2022 or 23, round about that period. The cycle cannot remain in a, you can say, a lower band. Hence another round of buying would take the stock beyond 1000, and probably if things really go right for 2 3 quarters, we could see 1500 to 1700 on the stock. That doesn't mean that you put in all your money right now into the stock. It's a good 4 year play. In between that period, you'll get that price, probably get out at those levels of 15 1700. And it is one of the best, you can say, ancillary plays in the CV segment. So as I explained with 2 3 names, there are very few in the auto ancillary that would continue to do well in very good times, and this is one of them. So I'm very positive, but only put 5% of your total holding. Do not put a lot of money, do not be stressed, and keep a stop loss. So if you have a stop loss in mind, get out of these stocks. It's not that you have to make money in this stock, it is just that it feels like that around 700, 650, 600 to 700 are very good levels for the stock to bottom out, and I believe that there is very little downside to the stock from these levels. So this was my video on Automotive Axle. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.